So before we can begin this course, we need to first define what it is that we will be doing. This course is primarily based on the private equity model of buying businesses. This model is called a leveraged buyout. Now, a leveraged buyout involves purchasing a business using large amounts of leverage, or in other words, debt. This gives the purchaser of the business several benefits over using their own money to purchase the business. The first and most obvious benefit of an LBO, or a leveraged buyout, is that you get to make a small down payment of usually 10 to 20%. Now, this could go even lower, with some deals even requiring as little as 0% down. The next benefit, which is not as obvious, is a high return on investment. Let's say a business is paying its owner $100,000. You value that business at a 3 times multiple, giving it a valuation of $300,000. If you buy that business and pay 10% of that money in cash, meaning that you paid $30,000 out of pocket, you just netted yourself a cool $70,000 in your first year of business. Now, keep in mind that this doesn't include any extra expenses incurred from debt or taxes, but it should give you an idea of the amount of money that can be made. That brings us to our next benefit, which is high income potential. With a $30,000 investment, you just bought yourself a $100,000 salary for the rest of your life. Now, there are many other benefits, but these are the 3 biggest. You may be wondering what the seller gets out of this transaction. Why would they sell to you, who wants to buy their business with debt, when they could sell it to someone else who has cash? The simple answer is that it makes no difference to them where the money came from, whether it came from your pocket or from the bank. They're getting paid either way. Another reason is there may not be anyone else. Many owners make the decision to sell when they're ready to retire or are burned out. The problem is, selling a business is not as easy as buying or selling stock. It takes time to sell a business, and some can take as much as 5 to 10 years to sell. So, even though you are purchasing a business and exchanging cash for it, they get the benefit of being able to retire. If for whatever reason they can't sell the business, they would have to shut it down, destroying what they've most likely worked their entire life to build. For this reason, many sellers are willing to work with buyers and even go as far as to offer financing in order to make the sale happen. So let's go over the basic overview of what we will be learning throughout the course. This course is split into 7 modules, each focusing on a certain aspect of the acquisition process. The first module helps you define your vision for the type of company you would like to acquire and the lifestyle it will provide you. It will also help you set criteria based on your vision to help guide you on searching for a business. Lastly, it will help you identify the team members you will need in order to help you accomplish your vision. We then move on to the next module, which will teach you how to source for business deals and ensure they meet your criteria. It will then explain what a confidential information memorandum is, how to get it, and what to do with it once you receive it. The next module will teach you about the financial statements and how to do a surface level analysis on a business, as well as a financial analysis. Once you have analyzed the business, the 4th module will teach you how to value that business and ensure that you don't overpay for it. After this module, the 5th module will teach you how to get pre-qualified for financing, so when the time comes to purchase the business, you are not struggling to find a way to pay for it. This module will also teach you the different types of financing available and how to go about obtaining them for when it's time to purchase the business. We then move on to Module 6, which will teach you how to identify a deal, how to do a no money down deal, and then make an offer using a letter of intent. Finally, in Module 7, you will learn about due diligence, how it should be conducted, and the steps necessary to close the deal.